Let's take it over to CME Group for today's market movers with easy to follow futures and options trades.
Welcome to Market Movers. I'm Jim Iuorio, and we're a matter of days away from an historic tax reformation package being signed into law. Today we're discussing how this could impact inflation and risk in 2018. We're going to be looking at CME Gold GC options as a way to prepare for the new world of lower corporate taxes. Joining me is Chief Investment Officer, Kingsview Asset Management, Scott Martin.
Hi, Jim.
Big deal, little deal, no deal.
Middle deal. I know, because you know I would do that too.
Yeah.
Here's the thing. The reason is only because we haven't quite seen the impact yet. Yes, we've seen the market impact. We've seen the S&P rally. We've seen the NASDAQ rally. But with respect to what those corporations do with this extra cash, that is the $64,000
Funny that you mentioned,
question.
because AT&T announced today that they're giving away $200 million in bonuses to 200,000 employees, 1,000 each. And I know they want to curry favor for their merger, but this is a big deal that they're saying, we love having extra money, we're going to inject it back in.
On top of things, as usual, you are my friend. And that's a great point. That's a great starting off point for at least looking at the potential that these tax savings will have for these corporations as they move in the future.
Is there going to be an inflation worry, and is the Fed going to raise rates in an appropriate manner to handle it, if there is?
Yes.
Yes and yes?
Yes, there will be. And I think that's a good thing, too, because if you look at the economic data that has heated up in the last, say, 3 to 6 months, as well as the hiring that we know is out there, inflation is soon, which is going to propel the Fed to keep hiking rates.
I hope you're right, and I think you're right. Now, before we dive into our trade discussions, I'd like to point out that, as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendation or advice. Prices and movements will vary. We're pricing at the Feb Gold contract was trading 1269, 1270-ish as we price these out, Scott.
So you talk about inflation these days. One of the favorite, I guess, vehicles to trade is usually GC,
Used to be,
right?
Used to be, right.
It used to be. And that's so interesting now, Jim. That's been the one tough thing for me looking at GC this year is the correlations have really broken down in GC with respect to how it trades versus economic data, inflation data, and certainly how it trades against stocks and bonds, too, whether it's the ES or the ZN. So I was just looking at the charts in GC today. I see a lot of resistance actually around that 1270 level. So I'm looking at buying the February 1260, 1240 put spread in GC for 5 ticks. It expires January 25th. The trade has a Feb Gold underlying at 1269. It risks the 500 you put out to put it on with potential 1,500 if it fills out, because I believe, as we've seen that bounce off the bottom, that 1270 is going to propel us into some resistance, and it's going to trace back to those lows we saw a couple weeks ago.
I like it. You're certainly going with what's been the gold. Gold's lost its way. Gold doesn't know whether it's a risk asset, whether it's an inflation asset, what it is. I think that perhaps gold will find its way again, particularly when we've seen the tremendous volatility in some of the cryptocurrencies. Perhaps people might look for their store value in gold instead. So I'm looking at buying the February Gold 1280, 1300 call spread the other way for 4.6 ticks. Also expires January 25th. Has Feb Gold underlying currently at 1269. Risks the $460 you put up to make a potential 1540.
Wrong direction. but good expression of risk and reward, just like mine. I mean, similar ratio there. But either way, it looks like a good expression on one side or another on the chart, because at that 1270 level, which if you look at the charts, there's some serious resistance there. If it breaks above there, obviously your call spread looks like it's going to be a winner.
I had mentioned cryptocurrencies. You didn't say anything. Do you think cryptocurrencies belong in this discussion about gold?
They do, because I believe the crypto rise has really taken the shine off of gold lately. You mentioned that. I think a lot of investors
taking the shine off of gold. That's a good one.
Right?
Yeah.
A lot of investors have been going to the cryptos to kind of be that safe haven, if you will, that alternative.
Thanks for joining us on Market Movers. I'm Jim Iuorio, where we're helping to make you a better trader.